The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Kevin Hinks, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, we have the Dow up 2, Nasdaq's up 37, S&Ps are up 2. You have the gold contract down $9. The 10-year notes off 4 ticks. The 30 is off 18. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Good
morning, Kevin.
Well, I'll tell you, man, this is, you probably heard the update, but this is, you talk about a little deviance. You know, I was watching those S&Ps this morning, and what they were doing, folks, is they were trading right where we had not took off yesterday, but the market came back quite a bit. And that's where the rejection of price comes, man. They can really take this thing topside. It's pretty wild, Kevin, isn't it?
Another day we're talking about, Tom, buying dips in the morning, right? If you bought that dip this morning, if you participated, your day is pretty much over. You already had a good day.
Well, the thing that's amazing is that, and I'm going to bring this up on Target TV, folks, as we're doing this, because this thing was coming right into, now this is the S&Ps, the futures, and the NASDAQ. It was coming right into where we took off at 3 o'clock yesterday afternoon. And it just rejected it. Now, what's going to be intriguing here is that if, in fact, those S&Ps can get over this 1854, and that's where we're laying, because if it gets over that, man, there's nothing in the way to hit the 1880, because we went down just as quick. You know what I mean? So
yeah, think about this, Tom. With the bounce that we've had this morning off those lows, and a 2-day Fed meeting with Janet Yellen coming up, where she's going to be talking dovish. You know it.
Yeah, they're going to have to pump something up, man, for the way markets are trading across the world, no doubt.
You could get a pretty thin, whippy trade here, and you're right, what you said in your update. You could get some air pockets on the upside here. It could be a runner.
Yeah, particularly because if you were looking at the markets pre-market, well, last night Japan was down 5.5%. 5.5%. They're talking about 5.5%. And, of course, most of Asia is not open, folks, because it's the Lunar New Year. And then Europe this morning was down down 1.5% to 2.3% across the board. And they were breaking lows, folks, okay? So it's going to be pretty wild. Now, we're still in earnings, right? I mean, earnings.
Yes. Oh, yes. We have Disney after the bell today.
Yeah.
And if people were watching, yesterday, Hasbro came out. And Hasbro beat because of Star Wars. They said they got a big kick out of Star Wars. So we'll see today if Disney follows through with the better numbers from Star Wars like Hasbro did 2 days ago. It's so funny. You guys will know this, and I'm sure Tommy knows this. Hasbro's still making a bunch of money off the Nerf.
I gotta love it.
That's amazing.
I played with a Nerf when I was a kid.
Right? I say, gotta love it.
Kevin,
that won't go out of style, man, right?
You want to hear something crazy? I did business with Hasbro and the two brothers, Hassenfeld, okay? And when Tommy and Caitlin were young, at Christmas, a truck shows up to the house with all toys in it.
Yeah. How old was I? I don't remember this truck toy from Hasbro.
You were like 4 to 6 years old.
Okay.
Yeah. I did. What I did is that I was selling first-class tickets at very inexpensive prices, and they were one of my big customers because they were right in, well, they're still in Rhode Island. Isn't that crazy?
But, I mean, yeah, amazing that the Nerf is still kicking out all these years. But it's funny. They made money off Hasbro beat on earnings. They made money off the Nerf, Star Wars, Jurassic World, and Marvel Comics. All the little boys, everything that a little boy would buy.
Jurassic...
making money. But for today, we'll see how that travel, that goes into Disney's earnings this afternoon.
Yeah.
I was going to say Jurassic World. That's interesting, though, because I just saw whatever that most recent Jurassic one they came out with a year or two ago, and that's still awesome. I'm 35, so I can relate. I can relate to Nerf. I can relate to Jurassic Park, right? It's
G.I. Joe. That's what they are dropping. That's what they are dropping off in the strawberry shot cokes, whatever that was for the ovens.
Sure.
Yeah.
Totally. Right. But I mean, the other thing we're looking at today, and we're going to look at cost-effective directional trades. Some of the stuff going on in these banks, man, are you getting some low levels in these banks?
Yeah. Yeah.
You got to really look hard at some of these banks that if I think the pain in the bond market and the yields is really showing up in these banks and the prices that you're seeing in some of these bank stocks.
Oh, it's like, hey, listen, I mean, there is no doubt that the world is looking right now and saying, okay, what is the problem? Goldman goes from $200 to $149. It's pretty intense. There's no doubt about that.
And Deutsche Bank's chief has to send a letter to his employees. Saying, hey, we're rock solid. Don't worry about us, and get back in there.
But isn't that one of those things when somebody says something and they have to state it that you should question it? Where they say, what I'm telling, where they have to tell you a reality that they say,
and particularly banks, because banks are just all about trust. Listen, folks, what every single bank out there, if you lose trust and they have a run, the banks don't have money to pay everyone off at the same time.
Yeah,
and that's always of course. The regulators, I'm sure, are scratching their head right now because that's the last thing that anyone wants. But
and here's some things we're going to talk about today. Are you a trader or are you an investor?
Okay.
Are you ready to make money in both directions of the market, or just are you?
And that's huge.
I heard you talking a little bit about that yesterday. That's awesome. I'll look forward to it, man.
12 o'clock right here, folks. Now, if you're in your car, remember, you can get it right on your phone, TFNN.com, hit Tiger TV. You can listen to swim lessons, 12 o'clock. Kevin, have a great one. Have a safe one.
Good talking to you guys all.
Okay, we're coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome, folks. We get the Dow down 23. NASDAQ is up 5. S&Ps are down 4.5. And, if we go over to Europe for a second, Europe, we'll see whether, if in fact, they're going to catch a bid. The CAT right now is down 1%. The FTSE's down 0.6, and the DAX is down 1/2. That is pretty impressive in the context of where these babies were this morning. The DAX 87.72, and you're at 89.29. They basically broke lows, and they were breaking them pretty good too. The FTSE 5596, and you're at 5652.
That was so quick. Could you go back over that? I didn't even follow those numbers. That was so quick. No, right here where you were, the 50. You just went so...
Okay, so the FTSE...
I'm just saying 5.
Broke new lows. We got to 55.96, and right now you're at 56.50.
Okay.
So you're 70 points, 60 points off the low. What you are also is that you're inside the January 20th level right now, which is the 5639.
5639.
Yeah. The DAX, we go over to the DAX. DAX got to a low today of 87.72, and you're at 89.30. Now, the DAX is a long way to go, big time. The January 20th low in the DAX is 93.14. Our own. Now, the way the SPY is set up and the Qs, the SPY yesterday rejected lower price. We went to 182.80. You had 191 million shares traded. You're going into that 286.
Sorry, 286?
286 million.
Okay, traded on. What day is that?
Just January 20th.
Okay.
You opened right at those lows again today. Now the key here is going to be, can you get up and over and stay over the 186.12, which was the high of yesterday? That is the same. Here, I'll bring this up. That's going to be the level, because if you can launch that level, we spiked at 10 o'clock to the 186.29, but you got to get over it. Once you get over it, then you're going to have a shot to really get that juice up to 191, which would be a mind blower. Inside the futures, that number inside the futures, we got to 1856, which is just that acceleration was insane.
Yeah, it looks like it from that chart. I was driving in here fast, so I wasn't in front of a computer, but I see it on your chart right now. 20
S&P points in 30 minutes. The 1856 is a big number, because if they keep selling 1856, guess what? Then thus far, what it would mean to me intraday is that you're actually building cars to go higher, not lower. The reason being is that you had come down into the lows where we took off from yesterday. You have a high volume swing point now up at the 1852. So if we go into the NQs, what was intriguing this morning is that it was the NASDAQ, the NQs that took off first. The NQs, that's pretty intense. Actually, the NQs, 39.74. Okay, so the NQs, now check this out. The number in the NQs is the 39.74. If that can get up and get the next lunge, then you can see the NQs get up to 4,100. Oh, that's only another. Well, no, that 4,100 is another 125 points.
Sure.
The oil market out here, I don't believe oil had a couple intra. Let's see, CLH. We had so we had a couple spikes. I'll see whether I can catch a bid now. So the spikes this morning, we had one at 0400. It got it to 30.52. Back down again. You had another at 5.50. Then we had another. There's the one I'm actually looking for. The one I'm looking for. We had one at 8.10. 8.10 this morning. We had got down to 29.59. You spiked higher, and now it looks like it's going to build some cause for that 30.58. That number. Remember yesterday we were looking at the lows of the downdraft. It missed it by, let's see, where is that? Here it is right here, right?
I don't remember that. Maybe you can refresh everybody else too.
Yesterday I was trading oil, and I was looking for it to go to so we hit the 31.38. I believe it's the number up here. 31 was like, there it is right there, 31.46. That's what I was looking.
What is that? The high of what?
With that was the low. That's where we came down. That's the last time we had any volume, which was at 8:20.
On Friday morning?
On Friday morning.
Okay.
This is the 8th yesterday.
Yep.
And then it gave it up. It didn't have it. So now what we're looking at, you're looking at right now, so we're at I have 30.12 right now. 30.80 is game. Why 30.80 is game is that this last time that we had any volume at 14:30 hours on Friday at that level. So we'll see, because if oil can catch a bid, what you will see is that that will put some juice behind the S&P, and that's what it's going to need.
How about gold? I know. So I was looking at gold. That was doing some funky stuff overnight, huh?
It was. I suspect right now that we hit 11.99. We're pulling back. The volume's not bad. This can get a decent pullback going. I'm figuring if we put this up, figure it was a one-way move. We go from what, 10.27 December 18th.
Sorry, that was, wait, what? 10 what?
10.47.
Okay.
1,047.
I think you said 10.27 the first time.
We get up to 1,200. A normal pullback would get you somewhere around 11.46.
And why do you say that?
Because what happens is that if you take a look at this, I'll put this up. That's probably a 0.786 pullback, but
okay.
11.54 is a 0.786. It's just where I was coming from that is that
you're just visually looking at it.
Exactly.
And you are going off those Fibonacci numbers, but you're just ballparking things as you do it.
That's right.
I just want people to follow along.
All right. The XAU, the HUI, what you have with the XAU and the HUI, now this you're going to get a lot out of because we're going to want to see the XAU and the HUI pull back with dramatically lighter volume. If we go to Gold Corp right now, we're back only 19 cents. You're back 5.4 million. You can see the amount of energy that was used was a lot of energy. But it's good because it was bigger. See, the downdraft was huge, folks, in October. First leg down was at 12 million. In Gold Corp, that went from 1560 to 1450. Next one was 19 million.
And you're all the way back in October of last year, just to bring people.
And then when we went up, you went up with 13 million and then 22 million. So that's what you want to see in order to break that supply line. That's what it comes down to. Dow Industrials right now are down 37. You get the NASDAQ up 20. S&Ps are down 4. Gold's off 7. We're going to be right back. Stay right there, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 45. You get the NASDAQ up 10. S&Ps are down 5. Some of the higher volume stocks out here. We have Bank of America up 6 cents. Facebook's up $1.51. You got Netflix up $3.23. Inside the NDX 100, what's moving the NDX 100 this morning? Tesla. Now Tesla's already got killed the last few days. Tesla's up 5.5%, up $8. Netflix is up 3.9%, $3.26. Electronic Arts is up 3.5% at $3. $1.90.
Slow down. EAA was up 3%, right? Up
3.6%, $1.94.
Okay.
Taken away from it on the way down, you have Viacom. Oh, this is getting hit. That's down 14% at $35.75. Discovery Communications is down 5.9%. Regeneron is down 3.4% or $13. Inside the Dow Industrials, the strength versus the weakness. Strength, DuPont's up 2%, $1.17. Home Depot's up 1.8 at $2. Walmart is down 2.8%, $1.91. Exxon is down 2%, $1. Verizon, that's been up. That's down 2% at $1.10. So the elections in New Hampshire today.
Yeah, they're rocking and rolling right now.
All you folks up New Hampshire, you got to get out there and vote.
Go vote. No matter what you care about politics, go vote.
Yeah, there's no doubt.
If everybody voted, I think the country would be a lot better off no matter what. So,
right.
You know, that's my only frustration with people. Republican, Democrat, liberal.
Right.
Just go vote.
Right.
There's no excuse. I mean, there's excuses. There's very few in my mind.
Yeah, no, there's no doubt.
You know, people fight and die and do all that stuff overseas for the simple right to vote. And
wow,
it's a shame. Yeah. You know,
it is. No, there's no doubt, man.
Yeah.
It's huge. It's huge. Let's go take a look at the DECK for one of the Tigers. This is Decker's Outdoor. They design market footwear. The low is 40 for the year. The high is 78. I'm thinking that he's talking about the fourth. But no, so they came out with earnings last week. Their estimate was 36 cents. They made 7 cents. The equity opened. Look at that. That's true. The equity had opened on. That was Friday,
the day
right?
Following earnings.
Is it? Okay.
That was the 5th. They came out on the 4th.
Okay.
So that's the day following earnings, probably.
So it opened at $42.20, went to a low of $41.96, and then it took off topside. Okay, so the question is, what the heck's going on with it? Now, what I found is that because you didn't break the swing point here, this lowest swing point from January 14th is 40.74. And it has volume, but it didn't break it. So this thing's going to go after the swing high of 50, well, it already has, 50.24. And if you get volume today of 1.2 million, it wouldn't be an ABC up because of the way that it came down. But I suspect it could make a run to that $54 to $57 area, and that is from October 30th. That's where that baby is laying out here. So pretty amazing. So the volatility, no doubt, is going to continue here.
Can we take a look at gold actually overnight and not just the long term? Because I saw like 2, 3 in the morning. Was that Asia that it spiked down? It spiked down to about $10 and then spiked up about $10 pretty quickly.
Yes. So that would be.
Yeah, right around there. Can you zoom in on that at all?
Yep, I can. At 2 o'clock in the morning, which would make sense, meaning, because Asia was so low probably, it hit 11.85. So it was down $15 from the high of yesterday.
Well, not even from the high of yesterday, though. I mean, this is quite a, you're talking about a $10 spike down, $10 spike back up, in no time, $10 down.
Right, right. And this gets interesting, because see this one right here, when it spiked back up, folks, at 03:20 Eastern time, that has volume. That's a lot of volume.
3:20 in the morning, just to make it as easy for people to follow as possible. I just saw that in the chart when I woke up, and I was wondering myself.
And that had 4,500 contracts. That's a lot of contracts in the middle of the night.
Yeah.
That's a player. Per contract, you're talking $4,100 a contract.
Sure.
So that's a big number. What we haven't had yet is that the euphoria is still not here in gold, and that's really good, because I don't want to see the euphoria. And what I expect you're going to get is that you get, basically a pullback. That'll calm things down a bit. You'll get the next leg, and, when gold starts running out there at 1250, 1300, then you're going to say, okay, I suspect, I don't know this yet, but I suspect that gold probably is the only thing that we look at every day that's up dramatically compared to, bonds. Bonds would be the same thing. Because bonds and gold are the only thing this year that have really taken off topside versus oil or the S&P or the NASDAQ,
Yeah.
Oh, and King Dollar. So check this out, folks. King Dollar's, I believe, is going to be an ABC structure on the way down, confirmed today. You're breaking the B point. I remember this. We didn't need a lot of volume here. We need volume of 42,000. Oh, it's going to be close then. Because most of the time in this dollar index, the volume comes in early.
Okay.
And, it needs 22 more thousand contracts.
And what time do those bars end at? We'll have to figure that one out.
I think the pit closes at 2:30. Oh, it's 5. It says 5 o'clock.
We'll have to figure that out.
Yeah, but
if the volume's coming in early, and that makes sense because the currencies in Europe are trading big time.
Yeah. When people are trading them, it has a lot more movement earlier in the day.
Sure.
If we look inside that commodity index, copper's okay. We're gonna look at the copper market too, because copper took a big hit last night. It's climbing its way back a bit. Copper's down 2.8%. Gasoline's off 1.9%. Rest of them aren't that bad, really. Let's go look at that copper market. So, copper, because 6 pennies, they're worrying about Chinese buying it for sure. HG, Yeah, HGH.
Thank you.
That doesn't look
you
that
put
bad.
a C. Is that okay?
Oh no, yeah,
That's
I get that wrong. I know. HGH6, right?
Hey,
No.
what, are you,
1 second.
what are you saying?
I'm putting the wrong symbol up.
Yeah. You're entering HC. Is that what you're trying to do?
No.
There you go. HGH, huh? Human growth hormone?
Yeah.
Can we slide Peyton Manning's name in there? Ooh.
Okay, so honestly, it's not that bad. You're down 6 pennies. You have volume out here of 47,000 contracts. You're going into 64,000 contracts, though. And you're going into 100,000 contracts. So that's not that bad. You do need a rejection of price, though. So the volume aspect, though, is not that bad. And that would be fast price destruction without volume. This is Tommy O'Brien, Tom O'Brien, folks. We want to hear from you. Our phone number is 877-927-6648. Don't forget, right after us, folks, you get our man, Mr. Basil Chapman, growling a problem with you. Swim lessons, Steve Rhodes, Dave White, myself, and Andy's going to be back tonight. We got a lot of great programming coming up for you. Dow's down 69. NASDAQ is down 1. S&P's down 8. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is, let's see where she is. She's down 94. NASDAQ is off 14. S&Ps are down 12. Let's go over and take a look at that S&P E-mini to see how she's backing into the expansion on the way up. And she's backing in with light volume. We'll see if she can hold price. You know, we went up at the 940 with 137,000 contracts. Last 10 minute we had 54,000, and right now we're just starting the next 10 minute. You know, so it's looks like it's going to wants to back right against. We'll see if we go 1835. This is a wild story. So check this out. We'll have to go through this story. Okay, where is? No, it's already gone. Oh, no, here it is. Three-way hedges. So listen to this, folks. Okay. Okay, oil drill is exposed in three-way hedges that as crude dips below $30. Oil at $30 a barrel is blowing a hole in the insurance that U.S. shale drillers bought to protect themselves against a crash. Companies including Marathon Oil, Noble, Calon Petroleum, Pioneer, Rex Energy, and Bonanza Creek use the strategy known as a three-way collar. See, they can call swim lessons for this too.
They sure should.
We'll walk you through this because we can. It's below it how they do it, but okay, use a strategy called the three-way collar that doesn't guarantee a minimum price of oil if oil falls below a certain level. Company records show while three-ways can be cheaper than other hedges, they leave drillers exposed to sharp declines. Okay, so let me move this down because this is pretty amazing how we're going to use one example. Well, they're using one example and walk you through it. Joseph Gatto Jr., Calon's chief financial officer, told investors at a conference in December that the company had hedged about 4,000 barrels a day in 2016, or 40% of their projected output, at a price of $56 a barrel. So it'd be pretty cool that oil's at 30 and they're getting 56.
Yes.
Okay. Now, about half of those contracts. Now, this is where they're going to show that he's actually not hedged at 4,000 barrels a day. About half of those contracts are worth significantly less at $30 a barrel because Calon employed three ways, Security Exchange Commission records show. Well, the company is guaranteed $58.23 for 364,000 barrels in the first half of 2016, or about 2,000 barrels a day. The remaining 364,000 have lost value because the strategy sacrifices protection when prices fall below $40.
Yeah.
The trade is three parts. First, one option capped at the best price Calon could get at $65 a barrel. Selling the right to profit if prices rise offsets the cost of protecting against the decline. The second piece established a floor of 55, which guaranteed a minimum that Calon would get paid even if oil fell below that point. By itself, this trade, called a collar, would have ensured that Calon received $25 a barrel protection when oil is trading at 30. Now, here's the kicker, folks. ...
However.
Yeah. However, this is the third part where he's going to lose money. Calon added a third element by selling a put option, sometimes called a subfloor, at $40 a barrel. Below this point, Calon essentially forfeits its protection. Instead of pocketing $55, the company is only entitled to the difference between the floor and the subfloor, or $15 a barrel in this case.
So between $40 and $55 a barrel.
Yeah.
I mean, it's interesting. I wonder what they sold those puts for. Not much money.
Right.
In terms of, you know.
No.
Yeah.
Exactly. At $30, Calon's going to realize $45 a barrel, $10 a barrel less than it would have received the traditional call. Well, that's not bad.
Well, yeah, but
he's still getting something.
You have to look below that too, in terms of, you know, they basically and
that's right.
You know,
that's right. That's right. Yeah, because
you know, if oil had stayed at $40, they would have looked brilliant. So that's, you know, they made a strategy play,
right?
And their strategy turned out to be incorrect. You know,
right.
And they were well aware of what they were doing, and that's where I think we're entering that realm where nobody consider this a possible realm, and that's what's dicey and dangerous for sure.
It definitely is.
But when you talk about insurance is because you're supposed to insure yourself against things that probably will never happen, but just in case, you know.
Yeah.
You know, so
no, there's
it's unfortunate that they said, we'll never go below 40, but what if we do? We never will. But what if we do? We never will. That's quite a gamble when you're running a big company like that to make that type of a bold bet.
Listen to this one. They have another one here. Okay. Similarly, Pioneer used 3 ways to cover 65,000 barrels a day in the first half of 2016, or a third of its projected output, the company filings show. The strategy capped the upside price at 73 and guaranteed a minimum of 63, which would have ensured $33 above the selling price of 30.
Sure.
However, Pioneer added a subfloor at 43. If oil's trading at $30 a barrel, Pioneer will get about $50, or the market price plus the $20 differential between the floor and the subfloor. The difference adds up. With oil at 40, Pioneer will realize about $845,000 less a day than it would have using the collar with the $63 price.
It's almost $1 million a day.
Pretty intense.
It's dangerous times when you're not taking insurance, and you know, that's an interesting bet, in that that's really not even insurance. All they're doing is trying to make things easier between the $40 and $60 level. As insurance really should be, what if really things go bad? You know, using multi-leg property, you know, strategies, they're not doing that at all. They're just saying, let's just ease the pain as oil fluctuates between 40 and 60, as opposed to saying, let's make sure we're locked in if oil ever tanks.
Exactly.
Which is not what they were doing.
Exactly. And you know what's amazing about that is that now that oil's down, just selling those calls, they could have just sold more calls and say, okay, for the next year, I'm going to say that I'm going to deliver oil at $63. And that's it. End of story. So they'd be giving up all upside of that. But, you know, they know what their expenses are. So picture we're running the company.
Sure.
We're running the company. You say, okay, are you happy with $63? Yeah, I'm happy with $63. You can just sell the call option and get all your production out at $63.
Okay, there's just so many legs I'm not following along to.
No, it's just only one leg. That is your.
I wish we could use exact examples on what we just went through.
Well, you'd be making a call that oil is going down, and
if we could,
you'd be wrong. You'd be wrong in the aspect where your downside is. Let's say that oil went from $65 back up to $100. You wouldn't make the $35 at all.
Are we talking about one of these companies or not? I'm confused with where we're even starting off from.
Okay, let's just start off right from today. So let's picture that today you own an oil company. Oil's at $29.78.
Call it $30.
$30. What would end up happening is that you sell forward, let's say at $35. You say, okay, I'm making money at $30. I'm putting a different differential on oil right now. Okay. So let's say that's $10 to $30. $30 has been the high.
Okay.
Okay. We have. You think oil's going to get hit? Yep. You just turn around and say, okay, I'm going to sell my production at $35 for the next year. End of story.
Yep.
One sell. That's what you get, $35.
Yep.
Your downside would be if it goes to $40, you don't make the extra $5. If it goes to $15, $50, you don't get any of that.
Sure.
And
okay, we'll have to revisit this when we come back.
You stay right there, folks. Dow right now is down 84, Nasdaq's off 12, S&Ps are down 11. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and this market keeps pressing.
Just to go over where we were going to revisit that, right, what we were talking about, you were just saying at any point they could have sold all their oil forward.
Right.
To make it simple.
Right.
My confusion there was, that's very easy hindsight to say, why didn't they just sell their oil when it was much higher? That was my confusion.
No, I understand.
Because you picked $65. Well, if we're going to go there, why didn't they just sell it all when it was at 110?
Listen, if I would have sold it at 110, I couldn't figure out when gold was at 1900 why these gold miners weren't selling all their gold instead of buying it.
To come back though, you are not happy when gold producers are hedging forward right now, which would be a very similar situation to oil producers watching it go from 120 to 60 and then selling all their oil, which is what you said they should do. So that was my...
That's right.
Okay.
Yeah.
Okay.
Yeah.
But you feel the opposite way with gold because you're a gold bull.
Well,
what if all the gold companies were selling their gold right now?
At 1900.
No,
okay?
but you were saying $65 oil, not saying oil producers should have sold it all at 110.
That's right.
Your point was they should have sold it at 65.
It's a market call as to
but
how much.
A lot of people make that call right now in gold, and that's not something you're a fan of because it's just a directional difference in the commodity.
No, it's what it is. Oil at $65, they were making a fortune. Gold at $1,100, they're not making a fortune. Okay, oil at $65, they were making hundreds of millions of dollars.
That's a very general statement to say everybody at $60 to $65 oil was making too much money they could stand as it went from 110. Because everybody wasn't.
My point is, when you're running a company, if you have the cash flow and you know you're going to make a profit for a year, why not do it?
Because you forego opportunity costs.
Right, I understand that.
Okay.
Right.
Well, when we talk about gold and we talk about oil, these decisions vastly different, and it's because of how somebody feels versus oil versus gold, and that's what I'm trying to bring everybody to the forefront.
Sure. The NDX, so NQH6. She's coming right back in there. Okay, so we go top side. You do 22,000 contracts. You do 24,000. Yeah, we came back with 13,000. So what you're doing here, folks, we're at 39.32, and it's testing that bar. And we'll see if, in fact, that's 7 minutes into that bar, and that's light volume into that bar. You know, so, and what you also have, now watch this, what you have is that your probability is high that you're going to go back topside, because at the highs of today, which, look at how high that is too, man, that's pretty amazing. So the high inside the NDX 100 is 4,004, and you have volume up there. just even for a test. Sure. Doesn't mean he has to break it, but for a test, guess what?
Sure.
And that's where, folks, you want to get over to the Nadex platform. If you haven't test drove the Nadex platform, go over and open the account. They'll put $25,000 of paper money, and I would go in a couple of those spreads, the Nadex spreads, NASDAQ spreads, just to see how this thing plays out. So you could test drive it with their money, the funny money.
We always say you learn from action, right?
You do.
You learn when the markets are moving.
You do.
And what an environment to just see. We always talk about, Nadex, it's an option based, you play risk reward, and premium is everything, and this is a great time to see how that premium adjusts when it's rocking and rolling.
And you're talking 70 points from where we are right now, just for a test of the high.
Right.
If you go look at the...
It's almost 2% on the index.
It's huge, man. It's huge. You stay right there, folks. Mr. Basil Chapman's coming up next. And then, of course, we're going to Chicago headquarters of TD Ameritrade, Thinkorswim, Swim Lessons, Steve Rhodes, Dave White, myself, Andy Heck, folks. Have a great one. Have a safe one. Stay right there for Basil. Thanks, man. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.